Turnaround Tuesday, everybody. How's everyone doing today? Before I get to the markets, we have a little business to take care of. And everyone wish Stelios a happy birthday. Happy birthday to you, buddy. Happy birthday to you. Happy birthday, dear Stelios. Happy birthday to you.
Thank you very much.
You, buddy, I hope this is your best year ever in every way. Trading, health, cars, which I know. I hope you get it.
Just health, man. Health is the main thing. Everything else is details.
All right, well, you know, I know how much you love cars. I was going to get you a Ferrari for your birthday, but my last trade didn't work out that great. So I'm going to have to wait till I get on a roll. But glad I've gotten to know you, call you friend, and I hope it's a great day and year for you, buddy.
Thank you very much, Dale. Thank you.
All right, you're very welcome. All right, so some Turnaround Tuesday ideas. As you can see, the S&Ps are not that far away from all-time highs, so I'm sure everyone's thinking it's a layup. You know, going back to January, the high was 28.76, so we're only about 23 handles away. I'd be careful being long up here for this reason. This is where we had the big NASDAQ break and what happened to Facebook. And if you see this high right here, you know, it made me a little suspicious about it being a high because we did confirm the high up here. But if you notice up here at new highs, we're not. But I'd go with the weak sister. NASDAQ has retraced a little over. It's about 10 above 78.6. So this could be a decent turnaround Tuesday, even if it's not a crash, to maybe at least retrace. This rally that we've had from last week from 160 to 470, you know, maybe you could get a pullback to 340. And this is the only one that hasn't taken out this high. The Dow has done it, or is about to do it right now. So that to me is a weak sister right there in NASDAQ. It is Tuesday. Maybe we could turn it. When it comes to a couple other things, I'm a little conflicted. It's hard for me to believe or, you know, just go with this Euro bounce that we're having here. I really thought that we would get one more low to take out these stops between here and there, and we never did. Maybe that's a sign of strength. I want to tip my hat to Blake, and he said, you know, be careful about being long the dollar yesterday when he showed the dollar index chart right up against all this major resistance. We're getting a pretty negative day, and the yen did follow through. I was talking about shorting it at 50.60, and I'd be taking half here. It's at 11.12. This was based upon yields, but this looks like this could be continue to roll over. I remember Greg talking about the possibility of 108. So yen still looks negative to me. And if that's the case, maybe metals have bottomed. I feel the same way about the gold and silver that I do about the dollar. I still think that there should be one more high in the dollar to push it up, but you know, getting a pretty good day. Talked about that was a tremor in the gold on that rally on Friday. So we've made a higher low in gold. I do know this, even though I don't know what to do right now, maybe this is the bottom. If we get one more low, and you could see we had divergence down here on Friday, then I'd be very interested if we had one more low there in the gold, and silver put in a reversal. It was almost like when the markets were closed. We closed at 28. See if we could get one more flush here. This looks a lot like the euro. right? Confirm low down here. But silver is outperforming gold twice as much. I'd be pretty interested if we could just flush these stops. Otherwise, we're on our way, and that was a turn. And it could have been, there's enough bearishness in euro and in the metals for this to be it. But I'm not a big believer in chasing things. If you didn't do anything yesterday, try and be patient. There are some cycles due about mid-month. If we stall here and flush one more time into mid-month, I'm a buyer in metals. So those are a few of the things I see. It's pretty much, you know, the dollar-based euro pound continues to perform with just like the silver is stronger than the gold, euro continues to be stronger than cable. Aussie's getting a nice pop here, Aussie and gold possibly rallying together. They do have a correlation that I pay attention to, and this oil is starting to look much better. This has started to look like a stop hunt, and you know, you guys that have followed my interviews with Kirk Spanos probably are, you know, get a little, some shivers down your spine when you hear about Iran doing naval exercises in the Strait of Hormuz, that they're undergoing a massive currency crisis, that there's instability within the regime. So I definitely would not be short crude. I'd be looking for a break to buy. It's a possibility that with sanctions beginning today, and even though our president has offered to sit down and negotiate with Rohini, we see that, you know, sometimes not much happens out of that. I think we're going sanctions alone. I don't think that the Europeans are going to join us. They're still part of the Iranian nuclear deal that we pulled out of. So I don't want to play the short side of crude, I don't think, all the way through year end. So breaks a buy there, and we've either turned in the dollar. I still believe that there's one more push up in the dollar to take off this high. Looks like this is a left shoulder, so maybe we're going to get down to the neckline. Also, this looks like a 2-driver to me on the 1 hour. We did diverge up here, so this was confirmed. Everyone see that? This one diverged, not by much, but a shade over 70. So if we got one more rally to new highs in the dollar index, I think you're going to see a pretty good decline. My buddy Jim Welsh, who, you know, called the euro decline pretty well, I saw some of his stuff recently, and he was thinking that once we do top, there could be about a 4% decline in the dollar. So if we get to 96, we're talking about, you know, 400 pips that could take us back down to 92. And he's also very bullish of gold. He was early, but says the case is building. So we'll see if we've got a bottom in gold here. One of the reasons that gold is lifting is because the yuan is putting in a pretty negative day here. Another reason why the dollar is weak, but you know, we'll see if this turns out to be the high in the yuan, or we get one more shot up. If that happens, then I do think the dollar will take out 9565. Now's the day to join. So if you're not a member, you know, get used to the platform into the fall, from when all the adults return from the Hamptons and volume returns to the market and the markets begin to trend. But don't fall asleep in August. Every once in a while, there's huge days. I remember August, mid-August 2015, the Dow opened 1,000 lower on what was happening with the devaluation of the yuan. So we'll see what happens with that. You want to get involved in the reimbursement program if you're outside the US, and talk to Justin and Trent. Here's their email. And it's a good time to think about, am I happy with my broker? Because they have a stable of relationships with different brokers, and I'm sure they could help you, advise you on finding a good fit. Again, I want to warn people, just like Justin, do not trade with unregulated brokers, because what good is it if you're successful and you're up 30-40% in your account and your funds aren't secure? So definitely make sure you're with a regulated FX firm, and the ones that are regulated in, you know, kind of unusual jurisdictions like Belize and the Seychelles and those kind of places. In fact, I think Manafort had some accounts in Seychelles. But you know, you want to be with a broker that you can always go to sleep at night knowing that if you need your funds, you could get them. So as Justin said, what's most important about in selecting a broker is your return of capital, not your return on capital. Everyone with me? Oh yeah, already played Nitish. Okay, any questions for me before I turn it over to the boss? Oh, you missed it? Okay, you could play the video later. I know I'm a I know how empty your day will be not hearing me play 4 chords and sing out a key. But it will be there on I may tell Velu to edit it out. Yeah. Okay, Blake, what are you up to, buddy? Oh, before we have a great guest today. And do you guys know Anthony Grisanti? He's on CNBC a lot for commenting. He's on Futures Now a lot on CNBC, does a lot in commodities. I kind of guessed, even though he's still a member, I don't know if it's NYSE, that he was probably a COMEX guy where they traded, or NYMEX where they traded metals and oil. But Grizz will be with us at the top of the hour, so stick around for Anthony Grisanti. And now, how are you, Blake? I could barely go outside for more than 2 minutes yesterday.
I know it's blazing hot, and you know it's supposed to cool off tomorrow. I think it actually breaks here on the West Coast, where we actually break back down, like, you know, 5 degrees, and hopefully it starts to slide. I don't know.
That's not even a 23% retrace.
No, it's not even close. Not even close.
Right.
It's disgusting outside. But anyway, hope all's well. Hey, I've got I just want to reiterate, if you guys are looking for a broker, and if you want to help us out and help yourself out, make sure you get a hold of the guys at Forest Park FX. You know, they're there to really assist you, whether or not you're a ForexAnalytix subscriber or not, and if you really want to be one, you know, make sure you go see them, because this will help you assist paying for your membership with ForexAnalytix if you use them and you're not in the United States. But if you got any questions for them, there's the email and Skype address right here. I'm going to go ahead and put this in the chat box for you guys, the link, so that's why you guys can get a hold of them personally, and just reach out to them. They're there to help. Okay, so first of all, I'd like to congratulate Andre. He shorted the U.S. dollar Norwegian krona, and I was going to short this thing last night. I actually had my finger on the button. Instead, what I did is I actually went long a little bit of gold and silver, which I'm glad that I did. I'm up pretty good in those, but this was such a managed risk trade, and we were sitting right here last night at 8:20. It's like 8:26, and I was looking at it. I was doing the analysis yesterday evening, and I'm like, we're right up against resistance. I'm thinking about just shorting and putting a stop above the highs, and then I'm like, you know, then I got sidetracked thinking about gold and silver, and I bought those instead. But which is fine. They worked out. I just, you know, you can't get them all. But I just want to say congratulations to Andre. He had a really good pickup in the U.S. dollar Norwegian krona. Worked out really fast. Norway had some stronger data overnight that assisted that move. But I want to point out, yeah, he did a great job. This is the daily sentiment index from last night. Now, let me grab a pen and
also a good eye yesterday, Blake, on seeing that the dollar was at major resistance, and telling
you.
people to be careful about being too bullish a dollar right here.
Well, yeah, okay. So the big problem with the dollar at the moment is you can see this daily sentiment index is at 92.
Yeah.
Gold and silver are at very low DSI sentiment extremes. And you got some other ones in there too. I mean, you got crude that's at where's crude oil? Here's crude oil at 84. You've got the pound that's at 13, so you got to be careful of a bounce there. The VIX at 8. And those are all very extreme readings, and the risk is that you can start seeing a little bit of a turn. Now, does that mean that the dollar's done for? No, not necessarily, but just some things to think about, especially when you got the euro dollar that's approaching the underside of this triangle here at the 116 and change level. Now, I look at the euro dollar, and I think we get to 116, 20. I think that's where we get to. But the question that I ask myself is, do I really want to short the euro, even if we get there, knowing that the sentiment index is as negative as it is? I'm not sure if I really want to get there, because the risk is if you break above 116.20, then we're going to squeeze. We're going to start to really squeeze. And I guess I'll take it as we get there to see what's happening. But with gold bouncing, silver bouncing, let's take you over to gold and silver really fast. Where are they? Oh, there they are. Okay, here's gold. Gold's got this downtrend line that it's really challenging here, and break above the highs from here in gold could really start to squeeze. Considering that gold hit the bottom of this, the support zone, 127% extension. We're also at a 50% retracement, a 618 also.
Just like the pound.
There's a lot of support down there. Well, as far as the pound goes, the pound it has some work to do. The pound, though, I think is at risk. If we break above this 129.80 level, it's at risk of squeezing higher. Especially, we could face a false breakdown in the cable, and that's that I believe is a risk for the pound. I mean, if we start to get above, especially like 130, and now you got a pound that'll probably squeeze a little. Also keep in mind that the Halifax PMIs came in a little stronger than expected overnight, so that's pretty positive for the pound. But the pound's it's been struggling to get up there, but it is one of those situations that you get above 129, 130, and I think 129, 130, you're going to really start to squeeze here. So I'm keeping a close eye on the cable, especially with the euro pretty firm. The RBA kept rates unchanged. The Aussie squeezed higher, and it really is this Aussie New Zealand that looks good. You got the Aussie New Zealand above 110. I did not buy it. I'm a little bummed out that I went to bed as soon as the RBA met. I was just kind of watching it before I shut down my computer, and I didn't take advantage of anything here with the RBA, but it's breaking higher above the 110 level. One currency that I just put in a little bit of a short is the US dollar Japanese yen. We are actually challenging an uptrend line. You can see relative strength is close to breaking down here, and so I'm shorting the US dollar, Japanese yen as a result. It really key support comes in around the 110.50 level, and that's where you know, things are going to get a little nasty for the pair if we start to break below that support. Just, you know, I think you should keep an eye on it in general. I have US dollar Canadian. I have a bid at 129.55, and I'm you know, I've had it outstanding for weeks. I mean, it's just been an outstanding order. I'm a little hesitant because of what I showed you with the dollar. I'm a little hesitant at being long the dollar just in general, but the dollar Canadian, it's where I want it to be for a long. And I know Steve's got a short, so and he's got a short that he's looking right at 29.52. I'll let him talk about it, and I'm not going to steal his thunder because he's been short the dollar Canadian. But we're coming right into that support level that I think is so critical for the dollar CAD. Seeing how it responds down here is going to be pretty important as far as I'm concerned. You mentioned turnaround Tuesday, Dale, and you know, the stock market just continues to be very strong. I look at the NASDAQ. I mean, the NASDAQ is just, you know, out of control, just, you know, continuing to strengthen here. And the S&P is close to all-time highs. We're getting close to what I would consider as channel resistance up here, but you know, it's hard to be long up here, but it is sure as hell hard to be short too. So
Blake,
yeah,
sorry to interrupt. Hey, sorry to interrupt. You saw the piece yesterday. I can't remember who published it, that they were saying that the rate of buybacks this year is at all-time records, and it's like double the pace of last year. So it's very difficult to go. Sorry?
Yeah, that would be something that I posted yesterday. Yeah.
Oh yeah, it was okay. I can't remember where I saw it. Okay, so then you did see it. But yeah, it's like when you have this power, you know, this move behind this, you know, this constant bid from the buybacks, it's very difficult to see where the turning point is going to be.
I agree with you, and you know, the question is, who is going to you know, be left holding the bag? You know, I still feel that we're playing this game of musical chairs right now, and you know, I don't know when the music stops. You know, especially with rates rising, when do the buybacks, you know, start to pare back? Or stop just in general, and who's going to be holding the bag, and who's going to be left without a chair when that happens? And by the way, happy birthday, Stelios. I yawned as I was saying that. Birthday.
Thank you very much. And I do agree with you that at some point somebody's going to be left holding the bag, and you know, retail is getting longer and longer stocks. So yeah, unfortunately, it might be that the case again, as it usually is.
Right. And that's usually the case, isn't it? You know, when they've pretty much convinced everybody that the market is going higher, is when we see it turn. And by the way, and Stelios, just on one last note regarding your birthday, this is the month where you are actually older than me, so take advantage. Okay. Senior man. Anyway, thanks for chiming in. And by the way, how do you feel about this cable? You know, the pound, I mean, it is still trading really heavy, despite, you know, the dollar being a little weaker today. The pound is just, you know, struggling to keep its head above water. Any new developments? I heard there's some comments regarding Prime Minister May overnight.
Yeah, well, that's, you know, this has been going around for weeks and months now, right? I mean, she's at a very precarious position. Her control over power is diminishing. So I think that, you know, we all know that actually the market probably thinks that her time is up quite soon in terms of leading the Conservative Party. What happens after that, you know, who knows? But I don't think we have had any new news, let's say, on UK after the Bank of England last week. So I still, you know, I'll stand by what I said yesterday. I still think that, okay, short term the pound looks very vulnerable, but we have to think what the market is currently pricing. And let's face it, we're pricing a lot of bad things for the UK already. You know, we're pricing virtually no hikes for the next 2 or 3 years, maybe 1 or 1.5, whatever it is. And we're pricing a big chance of a, you know, more than 50-50 of a no-deal Brexit. You know, the market probably prices a very good chance of May losing power or in some way. So, you know, I look at all these, and it's like a lot of things have to happen for reality to match what the market's pricing. So I'm still bullish the pound, but short term, yes, you know, it looks very heavy. You know, I wouldn't be surprised if cable goes down to, you know, I think some time ago I was saying I would love it to go to 128 to 128 and a half. That was a level I have to look at my charts again. But
well, 128 and a half is the 618 of the post-Brexit low.
Yes.
To most recent highs, and it comes in at 128.50. Where ultimately I think we're going, but you know, if the dollar. You saw the dollar sentiment index overnight. I mean, we're at 92. If the dollar just gets a broad-based sell-off, which is possible, I don't think it's going to be too aggressive of a sell-off, because I think euro has got its own mix of toxicity regarding Italy. But you know, even if the euro bounces to 117, you know, 1750, is that enough to lift the cable back above 130, back to 131 or 132? It's, you know, that I think is doable for the dollar, you know, and the pound rather.
Yeah, well, let me put it this way: if the euro goes to 117, 17 and a half, and cable does not bounce, that's a very, very bad signal.
Yeah, will be a bad sign. And by the way, I don't think that's entirely impossible if you look at the euro pound. The euro pound looks stronger as we've popped out of this this down channel. So you know, the euro pound could very easily just race up towards you know, 90 pence and leave the cable behind in a move like that. So but thanks Delios, I appreciate your comments. And matter of fact, I want to see if Steve is here. Steve, are you here?
Nope.
Okay. Hey, how's it going, Steve?
Good morning, mate. I'm good.
Hey, so you have a short in the dollar Canadian, and
for a couple of weeks now, actually.
For a couple of weeks, it's really nice trade. I like I said earlier, I didn't want to steal your thunder with the dollar Canadian, but I am looking towards, you know, 129.50, and I know you've been looking for this level too, and we are quickly approaching it, aren't we?
Yeah, we are actually. We are, and yeah I've already taken half profits, you know, just before I left for vacation, and I want to take the rest there because I still think that this move lower is likely to be corrective. So, you know, I wouldn't want to be giving back my gains to a market that might resume to the upside. I'm watching exactly what you're watching in your chart. I mean, this is the confluence of the 50% fib and this broken descending trend line. So why not? It might act as a nice support, right?
Yeah, it may, and I'm hoping it will. But again, this is all, a lot of this is so driven by NAFTA, and so anything can happen here. But I do have a bid that's only 10 pips away from the market, which might actually get tripped this morning. It's entirely possible. So, well, great. I'm going to pass it over to you, and I want to tell everybody, appreciate you guys being here on a slow summer day, even though, you know, we are getting some volatility due to, you know, all this trade rhetoric being thrown around the world that's keeping us on our toes in August. So if you're not traveling anywhere, this is the place to be if you trade currencies. So thanks everybody for being here. And Steve, I want to turn it over to you.
Good luck today, Blake.
Thank you, Coach.
Blake.
Hi, Steve.
How
are you, buddy? How's
I'm
it going,
good, mate.
man? So what are you waiting
been?
for? I'm good, bro. So you're waiting for just like another 15 pips or so in Canada to book it?
That's where I have my my order. Yeah. So
So do you ever get anxious when you're that close to targets to just say, "Ah, the hell with it, I'll take it"?
Not really. I'm currently like 230 something pips in the money. So you know, even if it completely reverses, I'm still gonna book some nice profits. I mean, either way, whatever happens, let's assume that it reverses hard, right? And we close right above these weeks at 130.40. Then I'm gonna be saying, okay, didn't make it there, gave us a nice reversal. I'm gonna book my profits, and it is what it is, right?
Well, I just want to take the opportunity to say, Steve's a pro, so he can do these things. A mistake I see people that are, maybe their first couple years into this is they have a limit order and they're 15, 20 pips away from their target or objective, and they haven't even moved their stops. I know Steve doesn't really use them, they're mental stops, but I've seen so many examples where people are looking for another 20, but they're risking 50 or even 80 to get that other 20. Doesn't make sense. So unless you've really tightened up your stops, I use this term because we know how governments are, close enough for government work. When you're 10, 15 pips away from either an entry or an exit, and don't risk more than you're looking to capture if you're looking for another 20. That's all I wanted to bring out to people, because I don't know, haven't you seen that? People, they're 15 pips away from their target and they're risking 50 to get that other 15. Doesn't make sense to me.
Of course, there are some standard amateur mistakes that you see, but something, everybody has to go through the same mindset, the same mistakes before they can progress. The question is, how patient you are and how stubborn you are. So and how cautious you are at the beginning, so you can go through the first phases of growing up as a trader, then puberty, let's call it, etc., and surviving that, so you can then be consistent.
Oh, I'm in male menopause. All right, man. I just wanted to, because I've seen it so many times. Don't do that. That's all I'm saying. Don't do that. And all right, buddy. So continue on with the board, and I'm interested in.
The problem is that I covered a lot of things yesterday, and to be honest, technically speaking, we haven't had much to change. There is an exception. I was watching at this ascending trend line yesterday that was barely holding. I said it in the USD yen. Seems to be breaking today, and I don't have a good feeling about it. Meaning that feels
I
quite
like
heavy
your target
to me.
down there. So
that's kind of like what I was talking. My target would be down there, but I have to say that the first level you should be watching is actually this confluence of the 61.8 of the last leg higher and the 200 daily moving average. So those are exactly at 110. So the first area you should be targeting is the 110 area, and if that actually gives way, I think that then yes, we're headed back towards this low, which is slightly above the 108 area. So I do think that USD yen looks quite heavy. As you see, also another thing we have to notice here is that the USD yen remains decoupled from risk. You can see here the S&P being at the highs. You can also see, let's switch to the Nikkei. Nikkei is higher today, right? USD yen is lower today. So there's already been like several weeks, a few months actually, that the USD yen has completely decoupled from its usual correlations. And if we want to switch to the bonds, actually let's switch directly to the yields, right? Because it has a direct correlation to the yields. You'll see that the US yields are a little bit higher today. Still, USD yen is lower. So something is really weird with USD yen. And if you actually want to be trading it, I think that you have to completely trade it as a separate entity, because lately it has been acting as such.
And the gold, but today the gold acting inverse to it. So every day the end decides, well, who am I going to correlate with? And it changes, you're right, it changes every day. Late last week, it was treasuries. Today, it's the gold. It hasn't been with equities. I don't know for how long, but you're right, it's schizophrenic.
Actually, it has been trading inversely to equities more often than not lately, right? Which is even weirder. I mean, I haven't done a correlation study actually, which would be interesting. Speaking of which, and I might do it later. But if the findings are that the correlation is actually not there at all lately, and there is some kind of a correlation, I'm pretty sure that it's going to be an inverse one. Than the usual one that we used to have. Now, you spoke about gold, and we can have this conversation about metals. I was saying yesterday that gold is still very heavy, and the only bullish scenario on the table is if this proves to be a descending wedge, because it draws nicely on the screen as a descending wedge, but it also needs to prove that it behaves as one, right?
Yeah.
So
I'm sure it's compressed. That's one of the most compressed wedges I've seen.
For sure.
I'd hate to put my foot in that shoe.
My
toes would get all scrunched, but yeah.
Absolutely. I mean, it looks like a nice descending wedge, as you've said. It's very much compressed, so a move out of this wedge is unavoidable. Very soon it has to happen within a couple of days max, so it has to happen within this week because there is no more room left. We also need to consider that this area that for the fourth consecutive day we've been holding is an area that more or less the 127% extension of the last move higher, let me mark it, of this move higher, right? And the 50 and the 50% fib of the move higher from, let me zoom out, from this low that we had here in 2015 to the recent high that we had here, confluence. So this area seems to be holding. We also have some RSI divergence, although it's not the one I characterize as reliable, because all the readings, despite diverging, are still below the oversold level. So we need to see what's going to happen from here. If it actually breaks through the wedge and we see some kind of a strength coming through finally, then I think we might see at least a short-term violent reaction to the upside, right? And because Blake mentioned the RSI before, the DSI before, and we've seen that dollar, metals, they all have extreme readings. So that's another thing that points. We also know from the COTs that the short positioning in gold in particular is very extreme. So I think that sooner rather than later, I don't know if it's going to be from here or after another push to the downside, because we have this 1190 area. It has been a support resistance area in the past. Is going to be the area that we finally see some kind of a squeeze higher. But I do think that sooner or later we should see a squeeze higher. I would still be waiting for more evidence though, because it is what it is. Now, having to do with silver, you said that it's overperforming today. Silver is likely in a triangle, and that's an element I don't really like, having to do with the potential of upside, because gold is showing evidence that might be a descending wedge, which if it reverses above there, that's actually a bullish formation. That's going to be actually a bullish break. But on the other hand, I think that the interpretation having to do with silver is the closest interpretation we have with the price action we already have in hand is probably a triangle. And triangles, where do triangles tend to break? In the direction of the trend. So where did we come from in this triangle? From the upside, right? So especially, considering how silver looks at the moment, I think that silver looks like it wants to move lower. And this is what makes me a little bit more skeptical about gold as well. This might also prove, instead of a triangle, it might prove to be a bull flag. So for example, an alternative interpretation would be this trend line, being the correct one, but then seeing some move higher like this, and then this being the parallel trend line, finding resistance at the previous support and support resistance zone, and then moving lower from there. So that changes the interpretation from a triangle to a bear flag. In both cases, though, those have to be considered continuation formations. So technically speaking, having to do with silver, I can really turn bullish as long as we remain below 1575. I was talking about this level, as we were testing it as support, that it's very critical for the bulls to hold this. And after we broke lower, I kept mentioning how important this is going to be as resistance. And unless we clear above it, I can't really be much enthusiastic about seeking upside targets having to do with silver. And this remains to be the case. Now, there are other metals that are showing bigger reactions today, for example, platinum. But once again, I have to point out here that platinum so far, this can be a triangle. Of course, there is an alternative interpretation, which is a bullish one. Let's go to the 4-hour chart. So it's not very pretty, right? But this can be an inverted head and shoulders formation, platinum, this being the neckline. So this can prove to be a bottoming pattern in platinum as well. In any case, we would definitely need to see a daily close above, I would say roughly 845 to feel more confident about it. So, platinum and gold showing some technical formations that can point to a reaction higher. But so far, I'm not seeing that for silver. Okay, I know that it's a little bit contradicting, but it is what it is. I mean, I can't just read something that isn't there. Now, palladium also finding support at support resistance area here. Let's see. I mean, we might see another leg to the upside, although I would remain very, very skeptical as long as palladium trades below this ascending trend line support. You can see how important it's been to the market since the very beginning of 2016. So this is a 2.5-year-old trend line. The market finally managed to break below it quite recently, like roughly in the middle of July, beginning of July, depends on how you want to see it. And I do think that as long as this remains broken and we trade below it, you need to respect the potential for more downside. Copper also rebounding from this horizontal support resistance area. I no longer have a position here. I took profits on my first half. I got stopped out at break even on the other half while I was on vacation. So, I'm not involved with this anymore. But, there is still the chance that copper is going to at least produce one more leg to the upside, something like this before low, right? So, copper also has some potential for another rebound. So, I do see some of those metals looking better for a reaction higher, some of them not yet. But let me say it oppositely. For all those metals, I don't believe that there is an appealing reward to risk ratio anymore for being short. I think that the time that you would want to be short is already past, unless we see a reaction higher to give a more appealing reward to risk opportunity to be looking lower again. I think that you're either flat or you're already short, in which case you're just handling, trailing your stop loss in your profits or whatever else, or you are making, your first attempts, of seeing if some reversal can manifest. All that, of course, depends on your trading style as well. Some people never want to trade reversals, and I totally understand it, right? Some people want to just follow the trend, which is, as a rule, it's probably the safest trading methodology you want to follow. Some people do like reversals, and I can tell you one thing as a fact: amateurs psychologically speaking, by default, are trying to trade reversals all the time, but they don't know how to do it because it's a tricky game, and that's why they get chopped up all the time. But there are pros that actually know very well how to trade reversals. They know very well how to have very appealing reward to risk opportunities, and they have absolutely no mental problems being wrong a few more times than being right, because they know that when they're right, they can make back what they lost in the failed attempts and a lot more. But you need to have a plan. I mean, you just can't psychologically approach a market like, okay, this is very, very oversold. Okay, I'm going to buy it. Or this is very, very overbought. Okay, I'm going to sell it, because that doesn't work, right? There are rules to this game. There is a question about USDMXN. You know something? Having to do with USDMXN, I'm seeing more or less the same kind of evidence I see in gold. So, for example, I'm seeing this as a potential descending wedge. This is definitely a huge reversal lower. I do think that the USDMXN has lower to go, but the question is not that. The question is, does it have lower to go from here, or it first needs to rebound higher? My intuition tells me that we're getting very close to the point that this should rebound higher. So I'm monitoring this descending wedge for that potential. So for example, it would be nice if it rebounded higher to find that support resistance area and then resume to the downside. I'm also monitoring this trend line support. So USDMXN trapped everybody long at the worst possible point. I do think that this was a move lower that was quite impulsive. This was a move higher to this move, and I think there is at least one more move lower missing. We've already seen part of it here, but I do think that eventually this move is going to bring the USDMXN to new lows, meaning lower lows than this low that I'm marking here. Okay. Now, do I think that this is the place you should be selling it? No, I don't. I'm not going to be buying it, but I have to tell you that if somebody forced me to do something with it short term, I repeat, I would probably be buying it and selling it. Now, if it rebounds higher and makes it, back to, let's say, 1910 to 1925 roughly, I think that would be a nice place to be looking lower once again, because as I said, in the medium term, I am expecting the pair to keep on moving lower, but not in the short term. Now, there is another question about what I think about USD-ZAR. What I think about the USD-ZAR is that this is likely some kind of a corrective move lower. Perhaps we've already broken above a pennant. So it looks to me like it might move higher from here, right? Definitely, as long as this 1310 level is holding, there is potential for more upside. I can tell you that much. RSI finding support above 40 also is somewhat of a bullish sign. Okay, that's what I think. Now, I was talking about it yesterday. I'm going to very briefly mention it. Yesterday, the move in the USD Turkish lira went, extremely parabolic. It actually reached like 542. I think this unraveling of the Turkish lira is now brutal. I mean, I remind you that the Turkish lira 10 years ago was trading at 115, and now it's trading at like 540. I do think that the central bank will have to jump and try to control the situation by hiking rate once again. But I also think that Erdogan is not going to let them go as far enough as they should. So I would expect some kind of a reaction lower, but I would also expect that this reaction lower will be short-lived, and it's going to be another opportunity to buy the USD Turkish lira. So I'm very pessimistic about the future of the Turkish lira and the Turkish economy, as long as nothing changes. Okay. Now, USD ruble, nice rejection again from the symmetrical triangle I was showing yesterday. But anyhow, let's go back to the more popular pairs. I know that Blake already covered like Euro USD. By the way, one little comment about the Euro USD. If we assume, because my safer assumption was always that this was a flat bottom triangle. So having to do with the triangle support, my approach was always that this trend line that I'm moving here is the one that you need to pay attention to. So, we never had actually a breakdown yet. Potential, by the way, since market has been moving. So that was my assumption. But there is also the possibility that this was a triangle that we've already broken lower. Now, if this was like a symmetrical triangle, so this intermittent trend line was the support one, and it's already been broken, then you should be expecting that this rebound that we're seeing now, that's now approaching this trend line once again, is going to get rejected. Okay, so in my opinion, proof of if this was the trend line support we should be watching or not is going to come rather fast to us. And if this trend line proves to be irrelevant after backtesting it, I think that then we should throw this in the garbage can and keep this as a flat bottom triangle. On the other hand, if actually the market reacts to a retest of this triangle and we see like some big rejection from there, then I think that would also be a nice trading opportunity, seeing a big rejection from there and then trading the Euro USD to the downside, looking for an initial target 114.50 and a secondary target at 113 might not be a bad idea. Now, let's see two very correlated markets. One of them is the USD Swiss. USD Swiss still remaining here in a triangle, a flat top triangle. I think that eventually this has a higher chance of breaking to the upside, right? Because it's a consolidation after a spectacular move higher. So I'm watching this with the potential of it breaking to the upside being, the likelier scenario. And the other one I wanted to show is the Euro Swiss, because I had been warning about the Euro Swiss some time ago. That's what we had drawn. I said that this looks to me like a pennant, and there's probably one more move missing to the downside. And indeed, Euro Swiss was never a fast mover, besides the periods, of course, that we had trouble with the floor, etc., in which case it moved like spectacularly within a millisecond. But other than that, it's a slow mover. Regardless, it has been on a steady path to what I'm expecting can be, one more move to the downside to complete a correction to this move higher that we had. Okay, so keep that in mind. Euro Swiss pushing lower, and this is actually one of the reasons that and one of the reasons that I mentioned it is because you should take that into account if you want to be trading the USD Swiss instead of the Euro USD, right? The fact that the Swiss currency seems likely to strengthen, at least from the Euro Swiss chart, makes it a little bit harder. It produces like a headwind if you're looking for USD Swiss upside in comparison to looking to Euro USD downside. Guys, regarding USD CAD, we have completed AB equals CD. Yeah, I agree with you, mate. That's one of the things I was looking for. That's why I also think that there is a good chance that the USD CAD is actually very close to completing a corrective move lower. Of course, this is a market. It can always end up proving to us that this is not a corrective move lower, but it's something different. But until it proves otherwise, we have to consider this a corrective move lower. Okay. So yeah, I agree with you. It's likely almost done, and that's why we would be better looking for a reaction higher. Now, nothing really has changed having to do with Aussie USD and Kiwi. Both of them are trading in triangles. We showed that yesterday as well. It's been now several weeks that we've been trapped in these ranges. I think that eventually we might continue to the downside, but until that happens, this is like a very, very choppy a period of time, and you have to endure through it. That's it. It's as simple as that. Let me see if we have any more questions. By the way, Dale, who do we have for an interview today?
Yeah, excuse me, Anthony Grisante. Anthony's on CNBC Futures Now quite a bit talking about oil. So he's here in the room.
Oil.
Yeah, so he's here in the
Nice.
room. Anytime you're ready, let me know.
Oh, I'm absolutely ready. I mean, I've covered all questions. The things that I didn't mention haven't really moved since yesterday that we covered the board. So since your guest is here, let me first show crude, since you're going to be talking about that. My opinion hasn't really changed. I mean, I remain bullish crude, but I think that in the short term, this looks like a consolidation that can produce one more leg lower before we actually get a resumption of the uptrend. But I will be very interested to hearing what your guest has to say about this. I'm guessing he's also going to fundamentally approach the market, so it's going to be interesting. Yeah. So enjoy the interview.
All right, buddy. Nice review. Hi, Anthony. I see you in the house. Thank you so much for taking the time to join us here in our community. I'm going to pass you the controls so that we could hear your voice and see your screen. You'll see a drop-down menu there, buddy. And let me check your mic.
He's calling.
Can you hear me now?
I can hear you, Anthony. How are you?
All right, great. I'm doing well. Thank you very much, Dale. Thanks for having me.
Oh, it's great to have you, Grizz. I follow you on CNBC for years. You always give real nice technical levels. Did you bring any charts to show today?
I do have charts. I'm pulling them up right now as we speak. So,
okay.
I'll be ready in 1 minute here.
Okay, Grizz. So I like to go back in time machines with people. I mean, it's a long and winding road to where people are at now. I know you're a member. I'm not sure what exchange. I'm guessing
it's the NYMEX.
Okay, I was going to guess NYMEX. Do guys still go down there to trade? Because I was in Chicago a few years ago, and the only pits that seemed to be populated were the options pit. Is it the same on NYMEX?
It's completely done now, Dale. All of the products that were traded on NYMEX have migrated to the screen.
Okay.
Yeah, it's pretty sad. But what we do have is we call it the Annex, and it's a room where about 60 or 70 traders decided to take up space. And these aren't only oil traders. There's a lot of gold traders here. The COMEX guys are here too.
Okay.
And,
yeah. So people didn't want to stay home. They wanted to have some peace and get away from their families, so they rented a space near the exchange.
Absolutely, yeah. And peace is correct, because you know how it is. You need complete focus when you trade this.
Okay, so before you got involved in commodities, was that your first entree? As you became an adult and decided on a career, did you know right away from being a young guy, maybe in college, that you wanted to be a trader, or is it?
I didn't know I wanted to be a trader until the first day I came to the trading floor. And it's a funny story, but my brother was down here already, and I was in college, and I was just finishing up my final year, and I visited my brother on the floor, and he said, "What are you going to do?" And I said, "How about you get me a job down here?" And it started from there, and that was, Dale, it was September of '84 that I started.
Okay.
And so here I am, too many years to count later, almost.
Yeah, I'm still waiting to see your screen. So I had.
Right, how do I put that screen up?
All right. So when you go to the screen share, it'll pop up and show you.
I see a. Okay, here we go.
Yeah. So I had a similar experience. I had already graduated, and a buddy of mine was a member at the CME in Chicago, and I went up to the gallery and saw Belly's Go Fast Market, and that was it. I had no idea when I was in college that I was going to do this, even though I was going to college in the middle of the cornfields in DeKalb, Illinois. But when I saw, the action on the floor, I was hooked right away, and the rest is history. 80 years. This was 80 years ago. No, I'm kidding.
Right.
Today it feels like 80 years ago. But so you had a similar, kind of a similar experience. So you're a lifer. You didn't do anything.
Absolutely.
You didn't do anything before this.
No, I didn't do anything.
Me either.
I don't know if I'll be doing anything after this.
Yeah, let me ask you this. Did you ever try and step away from it, Anthony, and say, I just need to recharge my battery or try and do something else? Because I did a couple of times, but I found myself, no matter what else I was doing, still with an eye on the market and following what was going on. I finally decided it was like being in the mafia or Hotel California.
Right.
You can't leave.
Yeah, once you're in, you can't get out. I've never done that. I've only taken, breaks, 2 weeks, 3 weeks, a month. I keep a lot of hobbies like the scuba dive and stuff like that. That kind of clears the head.
I like what you do for veterans. I noticed on the website that you.
That's another thing too.
Yeah, so you believe in sowing good seeds and helping guys that had more courage than I did to lay it all out on the line and face enemy fire. So congratulations and great work that you're doing for the veterans. So
well, thank you. I appreciate that. Dale, we started that organization about 6-7 years ago, and it took us 18 months to build one house. And right now we're doing about 10 or 15 a year houses, and we've done over 150 at this point. So wow.
That's great work, Anthony. So why don't we get back to fear and greed now? And you have the crude.
Can you see my screen?
I'm looking at the crude right here, and I see the green candle pushing up towards 70. So we've had two kind of significant tops and corrections. As I look at your chart, I certainly would not want to be short. It almost looks like, I look at 3 drive patterns, and to me, this has 2, so it looks incomplete. Tell us what your view is on crude, and do you consider yourself more of a technical, fundamental trader, or are both important to you?
I like to think that I can meld both of those things to make a decision on how to trade. Because if I looked at, if I looked at the technicals now, I'd be long this market. I am actually looking at it from the long side. But really, it's the fundamentals that kind of have pushed it to that. And the reason why I say that is because, technically this time of the year, Dale, we're past the peak summer demand season. And
the really, driving season.
Exactly. And every barrel of crude oil, half of it is refined into gasoline. So once that demand starts dropping, the demand for crude starts dropping. And we would be down, if you look a few days ago, you can see my pointer, I guess.
I can't.
A few sessions ago, we were pushing on the precipice here of that 67.50 area, where if we break through that, then we're looking back down to $65, $63 in that area. If you look kind of back about 20 or 30 days on my chart here. But what's happening is it's the geopolitical situation.
Okay. I was going to go there.
Iran. Right.
Yeah, I was going to go there. So, so do you think that the fact that the Iranians were holding naval exercises in the Strait of Hormuz put that floor in the crude down there, and now that sanctions are going to be put back on Iran, that a lot of this kind of people thought about what the repercussions would be if there were any problems in the Strait of Hormuz, and we could have a $40-50 move in crude, couldn't we?
We could, absolutely. This could go, we're talking 2 million barrels a day here. And in a situation where, the overall, supply imbalance that was existing for the last 4 or 5 years has gotten a lot better. There's not a lot of oil just sitting out in tankers floating around anymore. It's being used as world economies have improved. They've used a lot more. So, Dale, it's the uncertainty really that's driving this of what's going to happen.
Do you think, I've interviewed some people that, were talking about even, a year ago, what was going to happen in Iran with the discontent of the population. And, governments have a tendency that when there's civil unrest, that the best way to calm that down is to have people come together supporting the government, no matter who it is, if there's any kind of conflict. So does it look like a higher degree that something might happen there?
I'll tell you, it's a tough one at this point, because what they're doing is, because of the past sanctions, they've had to take a lot of the, let's call it the subsidies that the government has given the people, as far as gasoline and things like that. And,
right.
You just saw what happened in Haiti when they proposed an increase in gasoline and stopped some of the subsidies, and you had riots in the country for 2 days. And
their currency has collapsed.
Absolutely, and this is what you're getting there. So you buy less. Plus, the other thing is, a lot of these Middle Eastern countries, the population is young, and there's no jobs, there's no opportunity for anybody there, and this is all starting to come to a head. So I don't know if it's the days of I blindly support the government anymore. But I do know one thing, Dale, that in the midst of all civil unrest and everything else, whoever or whatever is in charge, they try to keep the oil flowing, because this is really one of the only commodity that they have that they can sell. A big commodity, let's say, that they have that they can sell. So they'll try to keep it flowing. And my thoughts are that a lot of this oil, especially if it's the sale is curtailed by the U.S. as far as sanctions go, a lot of this oil is going to wind up in China at a large discount. At a large discount. And
they're the best. They're the best traders, aren't they? I mean, I always tell people, when you read stories about China's going to be buying something, they put that out so they could distribute, and when you hear that China is selling something, they're accumulating. They're very good commodity traders. So, yeah, they're going to take advantage of, especially in the middle of the trade war. Why would China cooperate with us right now and not buy Iranian oil when we have a trade dispute going on with them?
Exactly. And you know what makes the Chinese good traders? Because they take emotion out of it. They take all the emotion out of it and everything else. So it doesn't matter to them.
I don't have any fingernails left. I'm very detached.
Right, exactly. It's human rights, none of that really is a concern when you're talking money and China and trading and things like that. So, and nuclear weapons, they could care less about whether or not another country owns them or not, is my opinion.
Okay.
So I think that a lot of the oil will wind up there, not all of it, but a lot of it. So that means that the Chinese that had contracts, with other nations will, end those and buy the oil from somewhere else. But then, oil it's not like there's, any more like millions and millions of barrels just sitting around. So,
okay,
oil will be sold somewhere else. It'll be sold somewhere else. But as long as we have this type of uncertainty hanging over the market and the threat of, potentially hundreds of thousands or even millions of barrels being taken off, you have to, you can't ignore it. And in my opinion, you have to look at crude from the long side at this point.
Okay, and if President Trump and President Rouhani get together for, a summit, kind of like President Trump did with Kim or Putin, do you think that would relieve some of the upside pressure and that might set up a break to buy?
Absolutely it would. Absolutely it would. I think that, the breaks you might get to buy now, because that summit could be, a few months down the road. But the breaks that you get to buy now would probably be based on the supply situation here in the U.S. And I think over the next few weeks, as refiners start to enter their turnaround phase, which means, they're getting ready for the winter and the
heating oil.
Gasoline. Exactly, and the grade of gasoline that has to be refined for that. It's the less grade. So now they have to get ready for winter, so they go to turnaround, so they start using less crude, which means you start seeing supply build. That would be the relief I think you get, Wednesday, tomorrow, later on today and tomorrow. But if you look at the chart itself, it's setting up up for some actually very good support, at least a couple dollars lower in that 67.50 area. You've got that the red line on my chart is that 50-day moving average that comes in at it's 68.83. But if you look at the bottom of the chart, the stochastic,
Yeah.
it's early in the morning, the Stokes. If you look at the
Yeah.
Stokes on the very bottom of the chart, you see where the blue crossed over the red. That's really a bullish sign right there. If you
Okay.
look at it, it's kind of at the bottom of the range. So even though we're at $69, this is nowhere near of a market that's too hot, or in fact, it's a little cool right now, if you ask me.
Okay.
So it's
All right.
not a market that's showing that it's too hot or anything like that.
Do you trade, Anthony? Do you trade the products, or do you do things
Oh, I do.
like
Absolutely.
crack spreads
Absolutely.
and
Here,
things
I'm
like
going to show
that?
you this. Here we go. This is the heat crack. It's a 5-minute. Let me go to the daily here. This has been really, really strong. Heating oil itself, which is really distillate, okay, and it's really diesel. They still call it heating oil in the contract here because that's the way all the symbols are set up. So this is really been, obviously we've been
Yeah.
here. It's $27 at a point. But to see a heat crack, at $22 at this time of the year is really, really significant. Because look, I can go back here and see, Dale, even though it's daily, you can see these
Dots.
little dots, right? And this is
Yeah. It looks like my EKG.
There you go. But this crack,
All right. So it's
very,
pretty
very well.
cheap historically, is what you're saying.
Absolutely. Well, no,
Okay.
I'm going to actually say that this crack is historically for this time of the year is a little bit expensive, but that's due to the supply situation. And this is gasoline to heating oil. This is another one, okay, which is big negative, which is another surprising thing, that the price of heating oil is actually over the price of gasoline at this time of the year, which is
Okay.
you
So that's
usually
unusual.
Don't see that. Yeah, absolutely. Usually, obviously, gasoline would be over. But because of heating oil, and we export a lot of diesel, so that's
all right. So
that market support.
all right. Anything in the precious metals, Anthony? Do you do anything there? I think you've been brought on for, huh?
I've been looking at gold because I see looking at the commitment of traders report, and let me see. I'm going to pull this up for you guys.
Oh yeah, the COT. You're breaking up a little bit on me. Are you using a mic off your computer?
No, I'm actually using a phone. Am I doing it?
Oh, okay. Now? Okay, a little better. Yeah. Okay, go ahead.
You know what? It's not a great connection, but the COT report in crude oil.
It's the most bullish it's been in years.
Absolutely.
Isn't it?
There's a lot of shorts in this market right now, and at some point they're going to start to cover. And when they do, this market is really going to go.
Yeah, I kind of thought what happened Friday when it rallied $16, even though the dollar was firm, was kind of like the first tremor before the volcano erupts or there's an earthquake. It just shows how short the market is, that it could rally $16 in about 2-3 hours out of nowhere.
Out of nowhere. So I'm going to just pull that up real quick. Here we go. Let's just show this. Let's see here.
And I wanted to ask you, Grizz, is Grizz Energy your business model? When people are listening to you right now, besides trading your own account, do you advise maybe hedgers?
I have a couple of smaller clients in the Midwest, and they own a bunch of retail gas stations, truck stops, things like that.
Okay.
And I advise them on it. I also send out a newsletter. I've kind of suspended it this summer because I traveled a lot earlier in the summer.
Good for you.
That's why you and I couldn't be on earlier in the summer. But I plan on starting again in the fall. And if if anybody hits me up at grz90 at AOL.com, I can give them all the information about the letter. The website is under construction, so I wouldn't even suggest going there. But see, here we go. If you look at this you know, this chart, this orange line is the number of shorts in gold
Right.
now. And if you look at where this started, back.
And those are the funds, right? Those are
right.
like.
These are managed money. So this is
Okay.
the funds. Okay.
Okay.
So this is kind of what you want to look at. So you look back at June of where this was and to where it is now. I mean, it's incredible. You know, 153,000 shorts versus, you know, in June 49,000. So
Okay.
the amount.
And the blue is what? Retail, small specs?
The blue are actually the open interest for the longs on this.
Oh, okay.
So there's also 100,000 longs, but really what we're looking at, you know, that's pretty significant in itself, but it's these shorts that have climbed so much.
Okay. And the green aqua are the commercials, and they have a very small short position.
That's actually the spreading on that. If I wanted to go, okay, here we go. These are the producers right now. All right. Obviously, they're short. Here's the swap dealers. Okay, that's about even, and that is not a surprise.
So the standout is the managed money short position.
Yes, exactly. Here's
okay.
Right. These are other reportables. These are small ones, things like that. But the standout right now is the managed money because that's what the hedge funds are doing.
As being a commodity trader, I know, Grizz, you have to pay attention to the dollar because the dollar is kind of the linchpin that everything spins around. And we've had a pretty good dollar rally that I think has put pressure on the gold. Any view that the dollar might be close to putting in a high?
Or like that at this point, Dale.
Okay.
You know what? Let's. I believe I have a dollar index chart here too, and if not, I can just.
I thought we might make one more high just to clean out the shorts over 95.65.
Right. You look at the. Here's the dollar index chart. Now you look at this right here. It's just, you got a couple little tops here. 95, you know, right above 95. Here's another one, 95.
Yeah.
So I think, you get one more spike above that to clean out this stuff, and then I think we could start heading a little bit lower. But
maybe down to your green line. What is that, a 200-day?
The 200-day, right here, 92.23. That's exactly.
Okay.
The 200-day line, blue is the 21, and the red is the 50.
Well,
so
Anthony, go ahead. No, go ahead.
At least get this down. I see this at least coming down to this, you know, at least the 50-day right there. And possibly all these bottoms right here, which are right below 94.
Okay. Anything you want to wrap it with? I think we've covered the board. You pay attention to equities. They just keep going up. They're going to continue to go up.
You know, Dale, I was thinking about that. I put out a tweet yesterday that, you know, anything that looks above, you know, where it settled, which was that 28.5 in the E-mini, I said to myself, you know what, above that, and I don't see any reason why this can't run
to new highs.
To new highs, absolutely. Because it seems like the market is really ignoring the trade wars right now. It's not showing up, obviously, in the data. The earnings have been good because of taxes alone.
Yes.
I think there's a bit of a disconnect going on between companies' performance and maybe the person on the ground, you know, the middle class guy. I don't think he's benefited as much as companies did off the tax reform, but you can't ignore that, so don't let that cloud your judgment. You know?
Right.
Right, because, you know, you might not be feeling it so much, but they are right now.
And they're feeling it with buybacks.
You know what, Dale, I agree with you 100%, but you know, two things move the equities market. It's the central bank, which is still kept, you know, interest rates are low, and earnings. And both of them have been very positive for companies. So,
well, Anthony, you know, now everyone knows that is watching us live and listens to the recording later why you're brought on CNBC to give some crystallized, huh?
Yeah, that was another one I wanted to say. You know, if you want to catch me tomorrow, I'm on, you know, I'll be on halftime report tomorrow around 12:30, between 12:30 and 1 o'clock. And not sure what we're going to talk about yet, but it'll certainly be one of the things we covered today.
All right. Well, I tell you what, it was a great presentation, and thank you for sharing your views on these different instruments, Anthony. I really enjoyed our conversation, and like it or not, you're my trading warrior brother now.
Same here, Dale. Thank you very much for having me, and anytime you want me on, just give me a ring.
Okay, Anthony Grisanti, everyone. You could follow him at Anthony Grizz, and you could get to his website. You can
go to my email, grz90@aol.com, and anybody that has any questions about trading, I'm always very happy to answer them. I'm also Anthony Grizz, G-R-I-Z, on Twitter, so you can follow me there and ask me questions through Twitter.
Okay, Anthony. Good hunting to you the rest of the summer, buddy.
Thank you very much, Dale.
And thank you for the great work you do for our guys that have laid it all out there, that have the bravery and courage to come back and need a helping hand. Thank you for doing that for our veterans. All right, buddy.
Thank you very much. All right,
thank you, Grizz.
Yep.
Adios.
Bye-bye.
Okay, that's Turnaround Tuesday, everybody. Enjoy the rest of your day. Welcome. I recommend you follow Grizz. As you can tell, the guy's got a handle on a lot of different markets, mainly commodities. So thank you for your attention today, and see everyone tomorrow. And don't just count your pips, count your blessings. Adios.